All right, audio should be good now. All right, cool, cool, cool. All right, what's going on, guys? First I'm going to break down kind of the current market environment. So I know I talked about ES yesterday as well. I was kind of looking to see if we take out all this liquidity pool. I'll be honest, I'm just not a big fan of indices right now for any long-term big picture move, only because I mean, just look at the market, right? It's very hard to get any one-sided directional play because as soon as the market has any big move up or down, typically gets stuffed and then the market reacts. Funny enough, Euro actually just has had actually the best type of trending move, um, especially on this daily candle. Now, I was talking about gold yesterday, right? For some reason, I don't know why it's looking like that on the futures chart, but if we actually just look at gold on a daily time frame, I was talking about it on the loom yesterday that it does look like we're going to possibly make higher highs. And now, the one thing I do like about it is that we are forming a 4-hour EBP inside of an overall structural swing. So from this swing low to this swing high, and then the market retested, beautiful EBP confirmation. So now we have this potential higher high, and we have this higher high on the daily time frame as well, and obviously this intra-week high as well. Not intra-week, well, prior it was a prior weekly high. So for me, this looks fairly bullish, and I'm just gonna wait. Now the candle probably is going to close. Let me remove this. The candle is probably going to close as an EBP. Still 24 minutes left. Um, but yeah, then from that point is obviously we look to go down to the lower time frames. We look to see if there's going to be any fair value gap. There's looks like there's going to be this inversion here on the 1 hour time frame. This candle obviously is still forming, but now we're getting the confirmation. I want to see yesterday if I was watching this overnight during Asia to see if we can get that push up, but we never got the close above here. And then we actually wicked above twice and then had this big downside move. But now we're kind of respecting this overall OTE. So from swing low to swing high is being respected. So again, these highs are probably, and then also this extension target as well is what I'm looking for on gold. I think this one's a little bit cleaner, to be honest, than ES and NQ. I'm not really sure what ES and NQ want to do, if I'm being honest. I think we're just going to chop. These are going to be more like, yeah, unless I see something on the 4-hour time frame, I'm not really interested in this one, to be honest. Same thing with ES. I just think gold has a better play, to be honest. So now it's kind of just waiting to see if we do get a retracement on this 4-hour EBP, assuming this closes in 23 minutes as the EBP, down into some sort of like thing, and now we could look for extended targets. This is how you optimize in terms of like if you can find an EBP play with a higher time frame objective and targets, this is typically how you can optimize your risk to reward. You in any trade? No, not currently. I did take this little bit of a scalp short here from like when this candle formed on the 1-hour time frame. I just took the next candle, opened, power of 3. It didn't close as an engulfing, but I still thought we would at least take out this low. So I just took a little bit of a scalp on this. I wanted to long this. Only problem was I didn't really see any good confirmation until now. So like for example, this some people will say, well, isn't this an EBP on the 1-hour time frame that you see? And even this one right here, right? The problem with this one is I don't like personally taking longs when I have a fair value gap above market that was created after a run on stop. So we took out the prior day highs in here in Asia, and then we had this big dump, right? Then we had this retest, and then I don't like taking longs like this until we invert this gap. Because again, like when the market is in a situation like this, right, where we're in between this range, where we took out liquidity from the downside and pushed up, we took liquidity to the upside, and then we're back inside of a range. I don't like taking positions really in here for like any big picture move until there's like some sort of inversion. Like if we had let's just say maybe we pushed up and then we create a 4-hour EBP to the downside and inverted this, then I would be more interested in potential sells. But now, I mean, hopefully there's a little bit of a retracement on this candle because it's kind of just going ape shit to the upside. But yeah, but that's why I was leaning bullish because on the daily time frame, the daily just shifted bullish, you know? And I usually don't, I talked about this all the time. I usually don't flip biases, but like when I see a daily candle like that, um, and then we also get like further confirmation on the daily, then we have a beautiful 4 hour EBP as well as a clear swing low to swing high with the fair value gap. I'm typically going to, again, at the end of the day, I'm trading the step that the market gives me. Now, if this closes as EVP, we remain above below this high, and then we kind of come down, that would be the most ideal situation, in my personal opinion, to look for any potential longs. I usually kind of hope that the EVP isn't this big of a candle because sometimes it won't retrace that much. But yeah, I mean, this is clear as day. I think we're gonna hit this Friday's high from last week, and then ultimately possibly last week's high as well. Like this is looking like very clear. This is the type of trade that if I lose on, like I'm very, very okay. I'm like 100% okay with, because these are the types of trades that is going to be like everything is aligned. The daily is bullish, the 4 hour is bullish, the weekly is bullish, right? But I was looking originally to see if we could go down to that fair value gap. So if we go to the weekly time frame, I want to see if we could go into that fair value gap. Sometimes it doesn't happen, right? But now the 4 hour is showing bullishness. The daily time frame is showing bullishness because we're respecting this. We had this daily EBP. Again, I don't know why the gold futures chart looks a little bit off compared to like, let's say gold over here. This just does not look like something. And now it looks like we formed the bottom wick of this daily candle. So if we form the bottom wick of this daily candle and we're going to have expansion and momentum to the upside, then that means this low is the low for the day. And if that's the case, then obviously we should see that expansion to the upside. So I think this one's much cleaner compared to indices. I think indices is just a little bit more choppy right now. I think the plays in gold and euro. I mean, what a move! Yeah, this one was just been going crazy since yesterday. It's funny. I was talking about how like euro is probably one of the shittier pairs, and since then we have beautiful move on euro while indices chop. But yeah, and yeah, okay. Let me see. How can I fix this screen? Let me know if that worked. Let me see how it looks on YouTube. All right, let me know if that's better. Let me just make maybe if I just take this out the way. Any currency pair you will analyze? Let me see currencies. Oh wow, N cube. Yeah, see NQ and ES, there really hasn't been much correlation. Like you see this dropping while ES is kind of like holding its ground. The thing is with it with the currencies right now, like there's no like it's just been ripping. Like it's very like I can't really. I will say this this I am watching dollar yen for a very good potential swing trade. So if we go to the weekly time frame, this is the only thing I'm watching for going into next week, especially if we close as an engulfing. Because right now we took out the prior week high and we're about to invert this. If this happens, this is going to be the major thing that I'm watching for going into next week. Because if we go to the monthly time frame, we have a fair value gap to the downside. So to me, this is just like peak expectation to drop down into this fair value gap. Beautiful weekly. Again, still obviously still like one more day in the week, but this looks like this is going to fade off fairly aggressively. And then from there, it would just be a simple like let's say we close back below. To be honest, even tomorrow's daily candle, you can look for a push up into like this the weekly potential weekly inversion, and then look for that downside move down to this liquidity pool, and then down to here. So I'm pretty bearish on dollar yen. This is like the thing is with euro is just I think it's a little bit too late to be honest. I do think we could possibly still keep pushing higher, right? Because we had this nice move off this weekly order block, but now I kind of missed the boat on this one. Same thing with DXY. I think DXY this just kind of like after FOMC, it's kind of just there's a little bit of a gap in here, so there's probably still more downside as well. But ultimately, we could just see this all the way down to the lows. 16 minutes until like this gold candle closes. Um, yeah, I can. I do have a video coming up about confirmation entries. Confirmation entries are, in my opinion, a lot easier than most people think it is. The hard part is finding a good bias because once you find a good bias, you can just kind of enter on anything. If I'm being honest with you guys, we go back to here. Yeah. Yeah, but you see, like, I don't like when I see this on indices where I see like one of them is pushing higher. I'm just gonna make this double. I don't like when this is kind of like you see on S&P we're kind of holding ground, and then you see on NQ we're kind of like dumping. Not the most ideal type of market condition to be trading in when it comes to indices. I'm going to put up another screen for that dollar yen because I do think dollar yen is going to be a pretty good short. Funny enough, currencies actually look a lot better in terms of potential moves than indices right now. Okay, let me go to dollar yen. Currencies have actually been moving a lot better compared to like because gold has been, yeah, see, like I don't think we're gonna get a fill in this one or any potential entry. We'll see. 15 minutes left to go to the candle, but like usually when the market is moving this aggressive, it's gonna be hard to kind of find an entry. An aggressive entry would be if, let's just say, there was a fair value gap that did form somewhere in here on the 15-minute time frame. That's usually like some sort of an aggressive entry that you can take because the fact is, like, is the market gonna have a full-on retracement all the way back into, let's just say, here? It could, but like the fact is there's a lot of liquidity overhead, and when there's a lot of liquidity pent up with a bunch of like consolidation, typically the breakout is going to be fairly aggressive. But we'll see. There's about 14 minutes left in this candle. Okay, let me see. There should be, let me see the Asia range. Let me make this black. Yeah. Dollar yen. Yeah, this honestly looks like the best by far when it comes to the daily time frame. This is a weekly fair value gap, and I think now that we inverted this daily one too, this looks like a very good potential swing trade. Like the thing is, most people when they look at specific markets, right? I'm not trying to be the person who necessarily nails this at this point because at this point, I don't know if this is going to continue higher to make a higher high. When the market has a failed bounce, right, where we fail to make a new high and we break back below, this is more high probability. Think of it like almost like a double top because now the market is showing you that this was an aggressor who bought is essentially getting trapped on this pump up. And not only that, the thing is this, if you want to like have an edge in the market, you have to find opportunities when the market is trapping traders. Typically these types of runs up are going to trap traders as people are essentially buying very aggressively. Big dump, like almost like an A-shaped reversal. You're going to typically have people who are stuck in these positions and there's momentum. So at the very least, I think we're going to at least take out that daily low in here, which was Friday's low. So this is something I'm watching going into tomorrow. Tomorrow is Fridays, usually a little bit lower volatility, but yeah. Whoops. Oops. Yeah, ES is still like holding up, which is like interesting. Like for me, ES and them, I still think like if I had to pick a bias, I still think all these equal highs, I mean equal lows are essentially going to be tagged. It's just do I feel comfortable taking any positions on it? Not necessarily. Um the train and trade floor, I haven't done it in a while. I might have something for going into the new year. But yeah, right now I've been trying to focus on like getting more funding and stuff like that. Speaking of like again, because I just recently passed those Topstep evals, and I'll be honest, guys, I kind of wish I made the move from CFDs to futures props much sooner, if I'm being honest. Because the scalability and like the ROI, I'll make a whole video on this because I don't want to like I don't want to just ramble on about it, and I want it to be more structured, but it's definitely a lot more scalable and it's cheaper. Like one of these Top Step accounts costs like 95 bucks. It's a 50K account, and the thing is, if you get like five, so I essentially just bought five of them and just tried to pass them all in one because they have a built-in trade copier, and it's the same price as a 100K account that I was trading with CFDs, but the benefit of this is there's no daily loss limits. So let's just say you build up a cushion on your account, you could essentially just risk a little bit more. And not only that, but like there's not that much restrictions and there's no consistency rule as well. And you can request a payout every 5 days that you have $200 of profit. So for me, and mind you, so if you're doing $2,000 across every single account, that's $10,000 of payout roughly every week and a half or so, which is not a bad deal. Now they only do offer up to 5 accounts, but like you can stack up multiple futures firms doing this. Yeah, so there goes ES. NQ actually looks interesting now. 4-hour potential EBP, 10 minutes to go. Yeah, like indices, this is what I mean. They have like these really aggressive runs up and runs down. But this actually looks pretty interesting now that the EBP is forming, and it's forming within bearish market structure. So swing high, swing low, and now we're forming a potential lower high. We know if this is going to be a lower high, this is going to be the lower low potential. Now the problem is like when it comes to entries, most people always ask me like, how do you like determine that? Number one, I always identify on the near leg, like on this impulse leg, is there going to be any fair value gap? Or did we create any inversion? So we did have an inversion right here. If we go down to the 15-minute, see these very aggressive price runs is actually very difficult to enter on. All I would say is this: you would want to ideally see the market remain below this 1-hour inversion because this is a very aggressive rundown. Let me even go to ES as well because now ES looks like we're going to take out those lows on the daily time frame. Let me go to the 4-hour as well. Yeah, okay, now the bias, see, okay, so now I was talking about yesterday how I wanted to see all this liquidity pool being ran out. Now, when you have a deal well, right, you ideally want to wait to see if there's going to be any confirmation. Now we're having this really big rejection on the 4-hour time frame, and we're respecting the 1-hour structure, right? So if you draw your fib, you always want to look for any potential opportunities in OTE. OTE, so like if you guys are not familiar with this, let me just give you guys the settings because I know some of you guys are not. So these are the settings. OT, you could even put the 0.5, which is medium threshold, which is 50% of that range. Anything above, you want to look for any potential reaction or lower high point. Now, if this ends up closing fairly bearish, again, 8 minutes to go on this candle, this does look good for continuations, especially NQ. NQ is the weaker of the two, so if you want to look like, let's say for something like down to this low, NQ would probably be the best thing to look for. Now, think of the concept of power of three. What you want to see essentially is you want to see that next candle open, push up into this area, right, into resistance. So when you do the power of three concept, the next candle that opens up, let me, the next candle that opens up, not sure where this thing went. Where's the So the next candle that opens up like on the 1-hour time frame, right? Or the 4-hour time frame, assuming this closes as an engulfing, you then want to look for that candle open to push into a resistance level. From that resistance level, you have two options. You can either just sell at the resistance, right, with a wider stop, or you could look for some sort of confirmation, like say on the 5-minute, 15-minute, etc. Me personally, I like depending on if the structure is very nice on the higher time frame, I'll typically just sell the area right away and then use a wider stop. In my personal opinion, you would not want it to see it above this structure on the 15-minute. See this consolidation before the drop lower? This is essentially a base. Typically, let me think of it like supply and demand zones, right? Think of it like a supply and demand zone. This little consolidation in here before a big move up is essentially your area of supply. So this is the area that you don't want the market to essentially trade above that full range. So if you see the overall candles, the candle high, candle low, this is essentially the area that you do not want the market to trade above. So when you do, like, let's say, if imagine someone sold it right this inversion in here, You would not want to see the marketplace if you're going to take that. I call it the front side sell, meaning the first retest. You do not want to see it above that. To be honest, I don't even think um, we might even get a retracement. We'll see. Yeah, we'll see if we can even get a retracement on this. Excuse me. Hey, Lucas, what's going on, man? Yeah, NQ shorts is definitely it. See, that's the thing. Like, I was still short buys going into it. I just don't like shorting the front side move when this is a very big range because what happens sometimes is the market can go like super deep in here and then now, and then you don't know where the lower high is going to form. But when the lower high potentially forms, right now, it's much easier to sell this, right? Look at the difference between like shorting this pop versus if this next candle shorts. If this next candle, I'm sorry, opens up and retests, think about how like trying to sell that is much better. Because now think about it, right? The lower high is essentially confirmed because of this 4-hour EBP that's forming. It's just I don't think we're gonna get an opportunity to be honest. The opportunity could just present itself on a retest on ES to be honest. Like you see this a little bit of an inversion, even this little bit of a breaker point in here. Let's see the 15-minute. Yeah, like this prior consolidation point could be a nice little bit of retest area, but does not look like NQ is going to retest. Now, I'll be honest, I'm not a big fan of this little bit of a wick rejection on gold. I'm going to more focus now on ES and NQ depending on this 4-hour closure. It is nice EBP though on the 4-hour time frame. Yeah, I think I never mind. I take that back. They both look fairly good. NQ and ES look down to those lows, and then GC gold. I think at the very least we can take out the higher high above here. But if I had to pick one, I do like NQ a little bit better, only because this is like more in structure as well. It's the same thing actually in reverse, where we have the bearish structure, right? Swing high, swing low, confirmation, and then gold, same thing. Swing low. Let me make this bigger. Have a swing low, swing, whoops, I'm sorry, swing low, swing high, confirmation. It's the same thing, but in reverse. This is the bearish example. This is a bullish example. No, so Topstep does have a monthly fee for the eval. Yeah, they do. But the thing is this, like I'm when it comes to prop firms, it's not gonna take me a month to pass. I'm either gonna blow it or I'm gonna pass it. With Topstep and futures firms though, there is a consistency rule, so you can't really full port on the challenge. You do have to be a little bit more methodical. CFDs, you could just full port the full bounce, but nowadays you can't even full port anymore on CFD firms because they start to they might either like deny you or they're just going to reduce your risk limit to the point like it's not even like it's not even like plausible to make any money with them. Okay. Yeah, this NQ, man, what a shame. And like sometimes like that's going to be the case of the matter. Like it's just going to be these really big dumps and you can't really get in because even if you go to the 5 minute, there's not really any entry. Like it doesn't even retest here. You see this like little bit of a structure when we have a breakdown below and closure below the lows, market structure break. There's not even a retest in here. I do think that if we're going to get a retest, it'll probably be on ES. I think this is way too far up, to be honest. Like it'll probably retest at this prior consolidation point in here, right? But yeah, it's like, do I really want to sell it right there? I feel like ES might be, in terms of risk, your risk is a little bit more defined on this one, which is about to close in about a minute or so. But yeah. No, I don't have any mentorship right now, Jason. Yeah, dollar CAD is like UJ. Let's see, dollar CAD. Yeah, the only thing is, like I talked about this yesterday, it's like when the market is, and this was a beautiful daily EVP. I mean, I don't know if anyone like was trading currencies. This is like phenomenal. You have a beautiful fair value gap, market takes out the high, closes, and then look at the reaction today. Into what? This was textbook. This is absolutely textbook. You even get a little bit of a distribution candle here where the market breaks down. We have a closure below, and we have market structure shift. Nice little retest. But even here, look at this, right? Let me show you guys something. I don't know why this. Let me just make this highlight the Asia range because I'm pretty sure it takes out the Asia range high. Yeah, so beautiful. I mean, this is beautiful. It takes out the Asia range high into a fair value gap. Now you can. This is what I mean by like in terms of structure. When you see this type of structure, like a little bit of a candle like that, and then we drop lower, this is essentially where you would not want the market to go back above. So let me just explain it real quick. You see this area in here, and you can refine it. You could go down to the 30-minute time frame, 5-minute time frame. If you wanted to sell something like this right away, all you would do is you would, because people always ask me, like, how do you define your risk in that situation? You have to find a base. Okay, I'm not sure what's going on. You have to define a base, meaning where was the last structural point that the market had before any sort of like, let me actually do this because this is so. All right, perfect. So look at how the market took out liquidity and then we had this impulse, right? So now this is your essentially your structural leg. This structural leg was created. You could even see it on the hourly time frame where we had a liquidity pool sweep and then we had a breakdown, right? Because some people look at this as the overall swing. You could, but this is like a little bit of a minor swing before the market dropped lower. Now, when you have something like this gap, some people are like, oh, what if it comes up here? It definitely can. But the thing is this, if you could either do one of two things, you could either adjust your risk where you can take like, half a position off, or you can just wait for some sort of confirmation. Nonetheless, like you don't like if you take an entry, let's just say over here, because there's a daily EBP and you're targeting the daily EBP candles low and you want to see an expansion, you can just go down to like the lower time frame, see where was the last swing high. The last swing high was up here. So if you were to take any sort of sell position, and you could even see the 5-minute imbalance as well, you could like let's say you want to just short it right during the London session. We're above Asia range high, and you don't have no confirmation. You could just put your stop loss above this prior swing, and then you could look to take a trade like this. Now, typically, it's better off to wait for confirmation if you want a better risk to reward. Um, but yeah, but dollar cat also looks good. The only thing is dollar cat has moved up or down a lot. But we'll see. I think next week is going to be more focus on indices, to be honest. I mean, I'm sorry, currencies. Now we do have these closures. I'm just not a I don't like when the market's consolidating and we have like a bunch of wicks. Like look at this. Because now the market wicked above this and we didn't really invert this now. Even though this is a 4-hour ABP, we're still in consolidation. So I'm not the biggest fan of this. I like ES a little bit more, to be honest. As long as NQ doesn't take out that low and we have a little bit of a retracement first, I think ES is a better play than gold. Because I've been in this situation too many times when the market's consolidating, and then we wick above into a key like this area of supply or this order block, and we have a little bit of a wick rejection. This is what I mean. Like if you want to identify weak opportunities in the marketplace, when you have this type of market condition, it gets choppy. Yeah, Kunal, the equity open drops super hard. That's the thing. Sometimes like that's what's difficult about trading like the on the indices is sometimes they just have a very aggressive run at the 9:30 open. But to be honest, man, I much rather miss the open because over time, it's much easier to trade around 10 o'clock, if I'm being honest with you. So this is the zone on ES that you would want to kind of see like a little bit of a rejection down into this low, and then possibly down into even again because the market is a little bit choppy. This is kind of like the area where I would think that we would go down into and sweep everything below it. Okay, we'll see if this gold actually plays out as well. Because if we go down to the 15 minute, is there any fair value gap or 5 minute? Yeah, on the 30 minutes, a little bit of a fair value gap right there. So realistically, gold should not go down below this low, this candle bar low, based off of the 30-minute time frame. If we're going to just rip higher. Yeah, Jason, if anything, just watch the YouTube videos because I'm going to start posting a lot more YouTube videos. The next video I'm going to have is going to be on time frame alignment, and then that's what I'm trying to do with these streams as well to try to explain things during real market conditions. Okay. Okay. All right, guys. If anything, I'm going to keep you guys updated because actually, because I just got a message. I have to go ahead and run and do something real quick on my computer. But yeah, if anything, I'll just keep you guys updated on Telegram. As I kind of just said, like the game plan for me really, I want to see us respect this area in here. So pretty much this breaker point, also this inversion. Let me see if there's any 5 minute base. Yeah, there's just like this 5 minute fair value gap. You would want to see ideally some sort of rejection in here. So kind of pop up, then on the 5 minute start to look for bearish structure. If you want to get like a better entry, and then there's a bunch of equal lows that I think is possibly going to hit as well. A little bit more choppy again comparatively on this on the higher time frame, but yeah, I really would not want us below this 30-minute bar low because this is the candle that broke above structure, and we have this imbalance. So you would want to see this imbalance respected. You don't want to see too many taps into it, to be honest. And then the 4-hour EBP candle high is here, the higher high is there on gold. So that's kind of like the game plan as well. And we'll see if there's anything that sets up here on ES. But I have to run real quick. Shorter stream, but if anything, I'll make a separate video in regards to the trades I took on Topstep, and that will be uploaded on my main channel. But I'll keep you guys, everything will be uploaded and updated inside the Telegram. So I'll see you guys in a bit.